Hello, welcome to Business Mornings, a midweek trade today. So much to unpack from the macroeconomy, Subnational's positioning for investment, and latest OMO auction from the Central Bank of Nigeria. But first, let's review some markets now, starting with oil. The oil market, we see oil prices held steady today after slipping nearly 1% yesterday, 0.32%, $62.14 a barrel. That's for Brent crude. There was a potential glut with ongoing uncertainty around Russian output, and we see the impact right there on the market there. We see WTI after falling below $60, failing to climb over it, $58.44 a barrel. That's for WTI, the U.S. grade, 0.33% up. Market watchers are now closely following developments in the Russia-Ukraine peace talks, which could sway global supply and influence prices in the coming weeks. So all eyes on what's playing out there with geopolitics. All right, let's get a check now on the local bourse. The performance yesterday, the exchange closed lower with the NGX shedding 33 basis points to 146,940 points. Pulling year-to-date returns to about 42.76%. Losses in major stocks like Transco Hotel, Okomo Oil, UACN dragged the market, even as trading activity, we see trading activity that surged yesterday, 550 million traded, valued at 13.85 billion. We also see deals, 30,090 there. For the sectoral performance, most of the sectors we track, we see mixed sentiment there. Banking, insurance, industrial goods closed in red. Oil and gas edge higher, and consumer goods that remained flat. Notable gainers yesterday, we see the likes of Learn Africa, Mercure, while Austin Lars, Eterna, and Transco Hotel led the decliners with double-digit losses there. So for the top gainer, we see Morrison there, 9.89%. So that's what played out yesterday. We'll give you more updates on what's happening for the market this midweek trade. All right, let's look at electricity now. The federal government's kicked off the repayment of 4 trillion naira owed to power generation companies, launching the first tranche of a 590 billion naira bond issuance. The move, part of it, a larger 4 trillion debt finance company, that's to the NBET Finance Company PLC. The bond program is fully guaranteed by the government. The initial tranche includes 300 billion naira in cash bonds offered to the market and 290 billion naira in non-cash bonds directly allotted to GENCOS. The bonds carry a 7-year tenor with fixed-rate coupons to be paid semi-annually, marking a major step in addressing long-standing debt in Nigeria's power sector. I know there was an outage yesterday. I didn't have light yesterday. I hope you have light now. At this point, I hope we don't have another outage today. All right, to other stories now. The House of Representatives have accused commercial banks of illegally deducting unexplained amounts from customer accounts. The allegations came from Kelechi Nwogu, chairman of the House Ad hoc Committee investigating taxes and bank charges on civil and public servant earnings. Speaking at the investigative panel, he emphasized that the committee's mandate is to ensure that all deductions by banks are accurate, lawful, and properly applied, sending a clear signal to financial institutions to justify any charges imposed on customers. All right, now to our first conversation. We're getting the OMO auction results. The Nigerian money market was stunned yesterday after the Central Bank of Nigeria walked away from its open market operation auction, rejecting all bids despite offering 600 billion naira in securities. Today we ask, why did the Central Bank turn down over 1.4 trillion naira in demand, and what does this mean for liquidity into bank rates and the broader financial market? Joining me for this conversation now, we have Akwere Oputu, Chief Dealer, Lotus Bank. Great to have you on the show. Good morning.
Good morning.
Fantastic. It's great to have you. Compliments of the season. So what message is the CBN sending by rejecting bids at about 22.13%? And what does it reveal about the central bank's target rates for these tenors?
Okay, so Ladi, like you mentioned yesterday, there was an OMO auction, and we saw over 1.1 trillion in subscription, but the central bank still did not have any sale at the auction. So what I think it means for the central bank, they're actually looking out for the market liquidity, and there was an OMO maturity that came in yesterday into the system. So I think they were trying to see price discovery to see where market players were actually looking to purchase these short-term OMO securities. I recall that they had an OMO auction previously, and they sold around, it was around 21% level. So these were still around where the bids were placed. And there's an NTB auction that is expected today. So I think the market is looking out to see what the rates will cut out at the end of the NTB auction, and whatever the rate closes at, it will help give direction to the central bank on where or whether or not or at what levels they would like to issue the OMO at this time.
So with the intended 600 billion naira mop-up failing, what alternative tools might the CBN deploy to manage excess liquidity in the system?
There's an NTB auction that is expected to be conducted this morning. It's already ongoing. Banks are already keying in their bids. The expectation is that rates are going to go up on that NTB auction, and that's because from the budget that the federal government the budget for 2026 that was released, we've seen that there's a deficit, and the DMO is looking to borrow much more. There was a calendar that was issued just 2 weeks ago, and we saw increased borrowing from about 3.6 trillion. They are hoping to increase that to about 4.7 trillion. So expectation is that they will see more bids at the NTB auction. So I think the central bank is trying to push those demands to federal government borrowing. So customers will actually borrow directly from the federal government to support the budget for 2026. And I think the monetary policy, the central bank is doing a lot to do price stability. They are stabilizing the FX rates. They're also borrowing from banks at the interbank market. So you can actually place your excess liquidity with the central bank overnight, and you can get as high as 22.5% in short-term borrowings from the central bank. So that's basically the alternative that most banks have for now. So what we need to look at is the international community. They can do interbank placements overnight. So they're actually looking out for these OMO issuances. They are clamoring for long-term OMO issuances. And if we don't see that happen in the market, the alternative will be for them to invest their money in dollar in the FCY space. And we don't want that to happen, because that will put a lot of pressure on the FX market. We can actually see some depreciation currently on the naira. So when you don't give the internationals the opportunity to roll over their maturities, the alternative for them will be to buy dollar.
Right, and we don't need pressure on the naira right now. But let's look at some of the investor sentiment there. Why was the 140-day tenor oversubscribed while the 98-day tenor, we see that was undersubscribed? What does this say about investor preferences, risk appetite, and for local investors alike?
So the investors are actually looking out for long-term securities, because that's where they play. They match these investments to their offshore takings for FDIs that have raised funds from their countries for up to 5 years. What they actually look out for is for long-term investments that they can match those funds they've raised from their various currencies. So I think it's a clamor for long-term bills. If the rates are actually higher on the long term, you see 1.1 trillion was what was actually requested for at the long term, the March, April 28 bill. So you see those are where the concentration really is. And I know that these investors, they're actually looking for 1 year paper so they can close at these levels and take their expectation, their profit expectation upfront.
All right. So, what's your outlook for the naira this December? We know we have the just got backs. They're coming in. That should they should bring in foreign currency. That should reduce pressure on the naira, don't you think?
There's a lot of maturities that are expected to come into the system this December. There are lots of coupons that are being paid. The 2033 bond coupon will be paid in December. We have several OMO maturities, so over 4 trillion is expected to come into the system. And these internationals, they need to roll over these funds because they need to match it against those FDI funds they have raised from their countries. So we expect that there will be a new OMO issuance to mop up this excess liquidity from the hands of banks and for the foreign investors to be able to get good yields on their investment. I know there's an NTB auction that is expected today, so we expect the rates to close higher. The yields already on those NTB papers are above 21%, which is actually good return for the investors, given that our inflation rate is at 16.02%, and we expect that the inflation figures will actually even churn out lower. So next week, we expect our new inflation figures to be released. There's a bond calendar issuance, so we expect bond issuance next week again. We also expect NTB auction to hold next week. There are OMO maturities that are coming into the system. So the central bank, the DMO, they need to do a lot to make sure that these liquidities are actually mopped out from the system. And giving these attractive yields to the foreign investors will give them confidence in the market. It will reduce the pressure from the central bank on the FX market. So we can actually see appreciation closing the year for the Naira.
All right, yeah, all eyes still on Naira's performance yet today. That's for 2025. Thank you so much, Aquarel Putu, Chief Dealer at Lotus Bank. Thank you for helping us break down that OMO auction yesterday. Thank you.
Thank you so much, Ladi.
All right, to all the stories now. So the Federal Inland Revenue Service, FIRS, have asked all law enforcement agencies to collaborate and work to enhance tax collection and enforcement. The FIRS is confident that this collaboration will help generate more revenue and there'll be more funds to devote to tackling security challenges facing the country. The service made this intervention at a crucial briefing and replay with representatives of law enforcement agencies held in Lagos. Take a listen.
To deliver on the premise of enhanced revenue, we need more than enforcement alone. We need interagency collaboration, coordinated strategy, and shared dedication. Therefore, I call on all our security partners here present to deepen cooperation with the FIRS, to share intelligence, support enforcement actions, and help secure compliance across sectors. Together, we can secure revenue assets, deter evasion, and eliminate threats to revenue integrity and generation.
What we've been able to do in this first session is to sensitize the security agencies on how to create a collaborative synergy with FIRS amidst all the security challenges that have been witnessed, that's been ravaging the economy, so that they can always give support to the FIRS in generating more revenue, because more revenue generated means more funding being given to the security outfit for us to live in a safe environment.
And now to our next conversation. Nigeria's economy is navigating a changing landscape, with elevated but declining in inflation, according to NBS data. But pressure on the cost of living is still weighing on households and businesses alike. Central Bank intensifies its fight against inflation. Investors and policymakers are also keeping a close eye on the upcoming U.S. Federal Reserve rate decision. That's today, which could influence capital inflows and foreign exchange dynamics. Today, we discuss the state of Nigeria's economic health and what it means for everyday Nigerians. Joining me for this conversation, we have Professor Joseph Nanas, Chief Economist, Development Bank of Nigeria. It's been a while. Great to have you on the show, sir. Good morning.
Good morning, Ladi. Lovely to be here today.
Fantastic. It's great to have you. So, how would you assess the current economic health of Nigeria? Would you say we're stabilizing or are risks still, mounting? We've seen inflation there, that's declining trajectory. We've also seen, the MPC, cut rates, this year, but they had to hold. in the last meeting. What are you seeing so far?
So I believe growth is broadly recovering because we've observed over the last 3 quarters there's been significant growth, 3.1 or so in Q1, 4.2 in Q2, and now just released 3.98 in Q3. However, while we've seen broad-based growth, it's not necessarily trickling down. So there's a imbalance in terms of the growth. The real question is, are households and MSMEs feeling this growth? So overall, when we take a look at the economy broadly, it's real, growth is happening, but it's uneven. We can take a look at inflation. Since the rebase of GDP in Q1, inflation, we've seen it decelerate continually for about 7 months or so. That said, we now know inflation's around 16% thereabout, but that does not necessarily translate to more money to spend in households. If you take a look at random surveys, you will find that a lot of folks are still feeling the pinch. While food inflation has gradually come down, overall inflation, people generally don't feel like their money is still going further. We take a look at the FX reforms that have occurred. The Nigerian foreign exchange market, for example, the central bank has done some good work in ensuring transparency, credibility, broadly clarity, which has made it easier and narrowed the difference between the parallel market and the official window, so which is also quite useful. It allows manufacturers, businesses broadly to plan. You can also take a look at, broadly speaking, the revenue drive has increased. So fiscal discipline needs to be deepened. It needs to be enhanced. And I say this because debt to GDP ratio is probably hovering above 40%. And the government needs that fiscal space in order to do more. We have external buffers that has improved gradually. We've seen this because the central bank reserves, we've seen, has increased. I think the last I checked was on 46 billion. So that's largely FPI. So we have foreign portfolio investors coming in, which has supported overall the strengthening of the Naira. However, we've also seen improvements in oil production. That has become quite useful too. Notwithstanding, when we take a look at, say, households and broadly speaking, their financial fragility, these folks are in pain. But those at the bottom of the pyramid need to feel this uplift. So we need to strengthen, broadly speaking, social protection. And when we take a look at that, I'm referencing automatic stabilizers. The cash transfers needs to be deepened, needs to be targeted, and we have come to age in Nigeria where we have BVN and identifying signals where we know specifically who needs support and who doesn't. We need to be targeted and needs to be implemented, and dare I say, we need to amplify those who have received and have benefited from it across the 6 geopolitical zone. That way, at least psychologically, the population can feel that the reforms are digging deeper and it's holding firm. So when we take a look at this broadly, we now end with the investor confidence and investor stability. They want to be able to predict the economy. They want to be able to understand the policy implementation. We have to move from policy announcements to productivity gains, productivity outcomes. And that's why I believe sincerely that over time, going into next year, we have to see more productivity to derive a degree of fiscal impact and overall broad-based growth as inclusive, and everyone, when I say everyone, I mean the rising tide should generally lift all boats.
Yeah, and talking about lifting all boats, inequality, that seems to be widening a lot this time. We did get the last data there that showed how many million Nigerians multidimensionally poor, that don't have access to the basics, at this point. Do you think realistically, as we are as a country, do you think we can really get it right, when it comes to stopping the weak, from failing? Is it possible, in your opinion so far?
So in economics, there's something we call the Gini coefficient. That is the degree, or if you like, inequality. And I believe because in advanced economies, it's already built in to their policies. The fiscal space is built in. So when people lose their jobs, you have unemployment insurance kick in. People get food stamps, or if you like, Medicare that supports the health and welfare benefits. But overall, here in Nigeria, we are not as mature yet, notwithstanding, dare I say this, the cash transfers that had started last year and continues on has maybe paused for a bit, but we need to highlight those folks and those areas, those regions in the country who have actually received these things. Because a lot of times there's an announcement made, a policy announcement that's made, but yet we don't see a situation whereby it's now followed up to ensure that these folks actually receive these benefits and it's now being put to use. A monitoring approach needs to be taken, and spotlights, or if you like, spot checks, to ensure that these folks are actually using these funds to support their welfare and improve their lifestyle and so on. In the end, do I believe this can be continued? Absolutely. We need to budget for it. Like everything else, we need to budget and ensure we implement and follow up accordingly. The reality is this. We have derived some savings over time because of the reduction in importation of fuel products, petroleum products, I mean. So if we know that, those savings can come in. And that's why I believe sincerely, if we are truly trying to ensure that the reforms are felt and they're entrenched in our system, then definitely I would say that perhaps this can be continued, and we need to ensure that we amplify the areas where it's needed the most, thereby allowing the rest of the country be carried along and feel that, okay, maybe at some point it will get to me. Hope springs eternal, and we need to demonstrate that as a country.
Right, because, definitely with a shock of, fuel prices, definitely we know what Nigerians were used to, paying for fuel, and the Naira, weakening from, 300 to getting to about 1,008, huge shocks, for households at this point. And when you don't have welfare from the government, I guess black tax, that has to cover it for it, at this point. And we're seeing that also rising a lot. But let's look at, CBN rate decisions so far. In 2025, we see February 2025, the CBN held rates 27.5. July 2025, MPR was unchanged, 27.5. And we got the September cut there, 50 basis points, then the hold in November. In your opinion, how would you say the CBN has performed, this year tackling inflation?
The CBN and the MPC, to be specific, need to be commended. And I say this because we have to take a look at where we were coming from. We're coming from a scenario where inflation was running out of control. And as a result, price stability broadly was, quite frankly, erratic. We couldn't plan. Manufacturers couldn't plan for importation of their goods and services and so on. And if we have this play out, we will see uneven growth or lowered growth. That's what we experienced over the past few years. However, with the reforms taking place, transparency in FX, businesses can now plan. The fact of the matter is this. The MPC has done a fantastic job, in my view, in terms of holding the rates firm. And I say this because last time I was on this show, I think we talked about the MPC decision in September, and I had said they should hold. And I said that because we need to hold, at least for the foreseeable future, because we need at least 1 year, at least a year-on-year growth pathway to understand the rebasing effect. Because there's no data, we're comparing different baskets, right? So the MPC would need to understudy to see if, in fact, inflation is actually decelerating at the speed they want it to, and if, in fact, it's still holding true. So the fact that they held this time is no surprise to me. Even though markets thought they wouldn't hold, I suspected they should hold, and they did a fantastic job by doing just that. Notwithstanding, going into next year, I still see a hawkish position, at least for the first quarter. Why? Because at least that gives us a 1 year period now to now compare the same basket of goods and services to align with consumer expectations, investor expectations, and so on. And besides, if you hold, at least you can still say observe Treasury rates inched up a bit because it was falling below inflation, quote unquote, of the 16.05%. And you do need to attract FPIs to come in. Where I have to say now is the FDI flow. Foreign direct investment has been low for a long period of time. The real question is, how can we convert FPIs to FDIs? How do we get more foreign direct investments to productive sectors to boost productivity, ultimately allowing inclusive growth to reign supreme? So that should be the next question from the fiscal side they need to respond to, because as far as I'm concerned, the monetary side has done their job in terms of maintaining price stability.
All right, so, definitely we did, reference GDP growth. You have Q2 2025, 4.23%, Q3 2025, 3.98%. And definitely when it comes to, the central bank, the MPC, they're trying to balance, the fight against inflation and also, try not to stifle growth. Do you think they succeeded there in not stifling growth?
So yes, the central bank's core mandate is price stability, meaning interest rates, exchange rates, inflation, price stability. Those three indicators is what they should be looking out for. If you see a situation where, if you will, growth happens, that's very good. The fiscal policy side needs to create industrial policies with incentives that allows the private sector to grow naturally. The fiscal side needs to ensure that they have, if you like, targeted agricultural interventions. They need to see improved logistics, efficiency in the power supply. So all these things I've mentioned rest solely on the fiscal side. If and when this is entrenched, when this is relatively stable power supply, give power a chance, you will see Nigeria take off. 5, 6, 7, 8, 9% growth will become quite normal because we have the numbers here, we have the diversity here to achieve this. For example, digital trade, the telco sector, if you like, fintech space and the creative economy. Those four sectors I've just mentioned have the opportunity and the potential to drive inclusive growth and to drive up heavily non-oil revenue. And that's an opportunity that we aren't fully harvesting just yet. And I think, dare I say, we have the opportunity now to key into the African Continental Free Trade Area. That alone creates a window of opportunity for growth and development across the African continent.
All right, let's look at external, influences now. All investors, globally bracing for the U.S. Federal Reserve's rate decision meeting. That's today. We'll get that, the final one, for 2025. How do you see the interplay of inflation and interest rate cuts in the U.S. so far, in 2025?
So in the U.S. right now, the Fed is more. They're probably going to cut. I think the market has priced in around 25 basis points cut. And that allows some degree of growth for the U.S. economy. If you take a look at the jobs market there, month on month, they've been probably turning out 50 to 60,000 jobs, which is very low for the U.S. Notwithstanding, productivity has been still high because the GDP hasn't suffered. I mean, the U.S. will probably close around 2% growth this year or so. And if that's the case, I would have expected it to close much lower. because of the Liberation Day tariffs and so on. Again, when we see Fed cutting rates, it has its implications too on overall FPI. Will FPI keep coming in? It's a function of us ensuring our rates are held steady and attractive enough to incentivize foreign portfolio investors to come in. So it's a delicate balance, and I think FPI is important, but FDI is long-term money. We need cool money and not necessarily hot money. A wise man once said, hot money rolled over several times becomes cool money. Again, in my mind, FDI gives you more elbow room, more planning room, and more time to grow and actually entrench job creation in your country rather than FPI. FPI just gives you enough comfort to stabilize your exchange rate and to cover the necessary import coverage that is required, which is also important too. So it's a balancing act, I think. But the Fed, more or less, I believe they will probably cut rates by 25 basis points.
So I guess you're not expecting any surprise there. At this point, consensus is another cut. But what do you see for forward guidance? Do you think forward guidance might be hawkish?
Well, I think forward guidance should be, and we have to be careful when there are certain key words and phrases Fed Chair Jerome Powell will probably use, will indicate where the future of the Fed will look like in terms of rate cuts in the future. However, you should also remember his tenure is about to come to an end. And President Trump has already indicated who he would like to replace Jerome Powell. I think I read somewhere Kevin Hassett, which is one of his economic advisors or something like that. But I think in the end, it boils down to how he communicates in his statements post the decision at the Federal Open Market Committee meeting today.
All right, investors are definitely bracing for that one. I guess markets are already gyrating, to that. Thank you so much. It was great having your perspective today, Professor Joseph Nana, Chief Economist, Development Bank of Nigeria. Thank you so much for coming on the show today.
Thanks for having me, Laddie.
Well, I'll take a break now. When we come back, we'll find out what's happening with subnationals in Nigeria when it comes to attracting investments. That's in a moment. Just stay with us. Well, let's look at the subnationals now. Obiakwa, which accounts for more than half of Port Harcourt's metropolis, is positioning itself as a hub for business and investment. Fresh from the Economic and Investment Summit, the council is pushing to improve the ease of doing business, attract investors and stimulate economic growth. Now, let's explore what concrete steps are being taken to transform the local economy and create opportunities for businesses and residents alike. Let's talk to Dr. Gift Walu, the chairman of Obiakwa Local Government Area. Great to have you on the show, sir. Good morning.
Good morning. How are you doing?
I'm fine. It's great to have you. Definitely, we're seeing a lot of subnationals now, trying to, lift their own weight, when it comes to attracting investment. Talk to me about, specific policies or reforms, your council is implementing, to make it easier, for businesses to start, operate, and grow in Obiakwa.
Okay, so thank you very much. First off, I'd like to say that I'm happy for this opportunity, and I want to thank you for yielding your platform to us this morning. First off, we believe that the time has come for society to begin to work together to solve shared problems, which will include tackling challenges and tapping into opportunities. And we believe also that the time has come for government, business, and other institutions to begin to see a point of interface so that each can benefit from the other towards building a more resilient, a more progressive society. And in Obiakpor local government under my watch, we are thinking differently, acting differently, believing that by so doing, we will also achieve differently and better. And so we have come up with a number of initiatives geared towards making life easier for the people, and especially the business community, because they contribute substantially to our revenue base, and they also are critical partners in anything that we are doing that resembles development. And if we sustain those relationships and we work together, we believe that over time, we'll be able to have a system where business people know what their role is in society, know, for example, what government is doing to assist them to function better, because they are job creators, they are producers of goods and services. And when all of these things are happening, we'll not only have goods, but we will have cheaper goods, and we'll have goods that are accessible to the people. So we are starting with the issue of how we collect revenue, how we collect taxes and levies from people who do business in our local government. Before now, it was done manually, where people go to those places to present them with demand notices and enforce compliance. But this time around, we want to go digital. We know that technology enables us to do these things better, faster, and easier. So we want to go digital, and we have come up with what we call the Digital Revenue Online Platform, DROP for short, that enables businesses to register online, know what levies and taxes they are supposed to pay, know why they are paying what they are asked to pay, know when they are supposed to pay it, be able to generate their own receipts online, and then generally know if they have complied or not. And while that is going on, we also have real-time information as to who has paid and who has not paid, and who has paid for what, and what is left, and all of that. When we do that, we increase our revenue collection, we bring more people into the tax net, and then we eliminate touting and all other things that make even the payment of taxes more inconvenient for taxpayers. We are also working towards establishing what we call the Obiakpor Chamber of Commerce, Mines and Agriculture. You agree that in Port Harcourt, in the whole of River State, there's only one Chamber of Commerce, the Port Harcourt Chamber of Commerce. And we think that the time has come for Obiakpor, and for even for crying out loud, other local governments within the area to be able to have Chamber of Commerces where people can come together and begin to think about what can happen in that local environment.
Right.
We are also pushing for, we have also presented our people with our blueprint for how we want to run the government in what we call the Obiakpor Arise, talking about administrative excellence, talking about reforms, talking about infrastructure development, security and peace, and of course, developing and sustaining a robust and inclusive economy.
All right. Thank you, for painting that picture, for us. And, definitely when it comes to, at the federal level, subnational level, we keep hearing about how governments are digitizing, collection. They want to make sure there are no leakages. So everyone's going digital, at this point. But are there any talks about going digital when it comes to, service delivery, for the people, making sure you get a platform where the people can tell you what they need, when it comes to amenities? Are we digitizing that too? Or are we just looking at digitizing revenue collection?
We are digitizing our basic processes in the local government. I talked to you about administrative excellence. Today, we are trying to get to that point where even if I travel out of the state or out of the country, from wherever I am, I can still do my work, taking advantage of technology. That is possible. Today, we have what we call the Obiakpor Information Center. And it's working like magic, that people now without having to come to the local government, can send in information, send their concerns, make requests, and all of that. And we can also respond to them in real time using those same channels. On Twitter, we are there, on Facebook, WhatsApp, and of course, SMS and all of that. And people can actually call in. A lot of work is going towards developing a proper Obiakwa Information Center, which will house the facility both for the revenue collection and every other thing that we are doing. That is in the works. But yesterday when I had my FRGPC meeting, that was one of the approvals that we made for us to set up the Obiakwa Information Center. Even the issue of how we manage our staff and our payroll and all of that, we need to bring them under that easier system of things. All geared towards making sure that people who work and reside in Obiakwa can very easily get services delivered to them without having to come to the local government council. And if they engage us, we try to see how we can speedily get things done, removing all the bottlenecks and the red tapeism that is associated with public service.
All right, definitely when we talk about, attracting local, foreign investors always want to make something, for their investment. Are there any targeted, incentives or programs, aimed at attracting both local and foreign investors to the local government area?
Yes, the first thing that investors want to see is that there's a framework that they can fit into. And so we're talking to our people about the need to develop specific infrastructure in the areas of security, in the areas of roads and all of that. And we're not just providing these things for the sake of providing them. We are providing them based on a plan that has already been articulated and shared with the people. And for example, we're talking about creating a chamber of commerce. This will enable people to cross-fertilize ideas and know what the gaps are and how we can fill them in an atmosphere where people are working together. What we call the Obaga United philosophy, where people united cannot be defeated, which was our campaign, mantra. Now, and I'm happy to say that the few businesses that have seen what we are doing are now coming out on their own willingly to want to register and be part of this thing, because they complained that in the past they had situations where after paying their taxes, for example, people still came back to disturb them, block their gates and say that they have not paid and they have to move back and forth and all of that. So, and then we're also talking about how we can help them, because people who are paying taxes, you'll be able to get some kind of benefit from the tax that they are paying. We're deepening that conversation around what local government can also do to them, for them specifically, in terms of their own specific needs, not the generic provision of infrastructure and all of that. And then we are providing incentive for early payment of taxes, for example. There's now what we call the early bird effect. Those who pay very early in the year, like between January and February, will enjoy some kind of rebate. And then those who pay maybe between February and April, they are paid within the time frame. And if you don't pay within that time frame, there may be penalty for that. And we're also thinking that when businesses operate in an area, they need to know the needs of the people in terms of employment, in terms of compliance with certain laws like the BIA, the local content, and all of that. The idea is that when they become such responsible, law-abiding corporate citizens, they enjoy a lot more benefit, because instances of youth restiveness and all of that will be arrested. We're talking with companies in our local government today about jointly tackling the issue of the skill gap in our communities, because we find that sometimes companies want to employ, but the local people don't have the required skill. So we're talking about what we can do to get these people to be properly skilled or upskilled, and then get them ready for the opportunity of employment when it will present. And the companies are saying that they are happy. That in fact, this is perhaps the first time they are seeing that the local government is going beyond revenue collection to talk about other things that are mutually beneficial to both parties. We're also bringing in universities and institutions of learning in the place to collaborate and also share their ideas. I'm coming from the university. Before now, I was a lecturer at the University of Port Harcourt. So I understand that there's a huge gap between what we teach in the university sometimes and what the industry actually needs.
Right.
So we're trying to see how we can bridge that gap in the what is called the town-gown symbiosis, so that we can now have a system where everybody knows what is going on, what is expected of them, and of course what we're expecting to have at the end of the day.
All right. So I guess it's not just book smart. We need business smart, people at this point. Thank you so much. It was great having this conversation with you, Dr. Gift Wall, who's the chairman, Obiakpo Local Government Area. Thank you for coming on the show today, sir.
Thank you. It's a pleasure.
All right. When we come back, we head straight to the global economy. Just stay with us. All right, let's find out what's playing out in the global economy. We have Will Ibong with the details. It's been a while seeing you on this side.
Yeah, Laddie, it's been a while. I'm beginning to feel like a visitor, where I'm just looking for that gold mine.
Visitor to the morning.
In the morning, that August visitor. But right now we're in December, we're cashing out on what's happening, especially with expectations of the U.S. rate cut today. You were discussing that with Professor Nana.
Yeah.
And I was like, okay, fine. We see global yields, trending higher, they're soaring, and possibly on the fact that not a lot of investors right now, market players are probably not pricing in a rate cut right now.
Right.
They're not, I think they're not
it's
holding
all
their
about
breath.
the forward guidance.
Yes.
What's he going to say about,
what's he going to say?
Even though he's not going to be the Fed chair for very long.
Well, Trump and the Fed chair, they've got to solve that problem. But let's just see what's going on in the global space. And we saw yields, we talked about global yields, the bond yields jumping to levels last seen in 2009 as markets say they're bracing for the Federal Reserve's policy decision and they're scaling back expectations of further rate cuts. Now, a Bloomberg index shows long-dated government bond yields climbing to 16-year highs, with traders now betting that major central banks may be nearing the end of their easing cycles. Now, money markets are pricing in no additional cuts from the European Central Bank, a likely rate hike in Japan, and 2/4 point increases in Australia next year. Now, talking about cuts and inflation, European Central Bank policymakers said there may be no need for further rate cuts for the Eurozone economy, and inflation came in stronger than forecast. Lithuania's central bank's chief Gediminas Simkus said the downside risks have eased, pointing to better than expected third-quarter GDP figures as evidence of improved momentum. His comments suggest the ECB could hold rates steady for now as the 20-nation bloc shows more resilience than earlier feared. Now let's go to Asia and see how they are faring. China's consumer prices rose 0.7% in November. Inflation is really taking high there, the highest since February 2024, driven by food and higher demand for home appliances and clothing. Core inflation climbed 1.2% year-on-year. Producer prices, we see that falling 2.2%, extending factory gate deflation into the fourth year with steep drops in coal, oil, and gas sectors. And despite higher consumer prices, weak household spending, and a struggling labor market are keeping deflationary pressures entrenched in the country. Now, let's move to the tech space. Amazon has pledged over $35 billion in India's cloud and AI sector by 2030, and that's building on nearly $40 billion already invested in the country. Now, the initiative aims to create 1 million jobs, expand exports, and benefit 15 million small businesses. Also, in the same vein, we see Microsoft saying it will invest $17.5 billion over the next 4 years to expand AI infrastructure, and that's building on the $3 billion already invested, embed AI in national platforms, and train 20 million Indians by 2030, following talks between CEO Satya Nadella and Prime Minister Narendra Modi. Now, both investments from Amazon and Microsoft highlight India's growing role in AI and cloud technology, supporting local infrastructure, empowering businesses, and strengthening the country's position as a global tech hub. And finally, we see the CEO of South Korean online retail giant Coupang, CEO Park Dae-jun, has resigned after a massive data breach exposed the data of nearly 34 million customers. It's a lot of data breaches there. He apologized and said he accepted full responsibility. The company has named Harold Rogers its Chief Administrative Officer and General Counsel as interim CEO to restore customer confidence and steady operations. Now, police have raided Coupang's headquarters as investigations deepen, with officials warning of tough action if any legal violations are confirmed. And those are the highlights from the global economic space.
Well, thank you so much, Will. Let's get a quick check on what's playing out with the market right now. Trading is on, and we'll see 146,916. Checking investing.com. Marginally down, just about 2 basis points. And we're seeing a couple of stocks there getting attention from investors, likes of Access Holdings, Tantalizers, United Capital, First Holdco, eTransact. Those are the most active trades right there, according to the investing.com terminal. We'll give you more updates on what's playing out with global markets that we track. We'll see how investors are bracing for the Fed Reserve decision. That's today, the last one for 2025. We'll also get forward guidance on what to expect from in 2026 and when it comes to interest rates and inflation story in the U.S. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.